It's time for business news now, and Stephen Carroll joins me on set. And Stephen, you're starting out with those trade talks between the US and the EU, and Germany's vice-chancellor has poured cold water on hopes of a deal.
Sigmar Gabriel says the talks over a new trade agreement have de facto failed. Gabriel, who's also the country's economy minister, says nothing is moving forward in the discussions, which have been going on for 3 years. TTIP, as the transatlantic trade deal is known, will be the biggest bilateral trade agreement in history. Hopes, though, have been fading that the talks could be concluded before the American presidential elections in November. Now, the deal's proponents say it would bring a huge economic boost to both sides of the Atlantic, but the discussions have been stumbling on issues including the protection of agricultural products. Sigmar Gabriel certainly not optimistic of a deal.
Indeed not. What's been happening on the markets this hour?
Well, a mixed picture on the Asian markets today. Investors digesting comments from the head of the Federal Reserve in the United States, Janet Yellen, on the potential for an interest rate rise. More on that in a couple of minutes. But for now, the picture on the Asian markets, we can see the Nikkei in Tokyo is up by over 2%, by far outperforming the rest of the Asian markets. And that's to do with the stronger dollar that resulted from Janet Yellen's comments, of course, making things cheaper for exporters in Japan. So good news, at least for those Japanese exporters.
OK, moving on. The Japanese Prime Minister has been signing deals in Kenya.
Shinzo Abe is in Nairobi for a conference aimed at boosting trade ties between African countries and the world's third largest economy. 73 deals with Japanese companies were signed on Sunday. Tokyo has pledged to invest some $30 billion in Africa in the coming years. Japan is keen not to be outdone by its neighbour China, which has been pouring money into African projects in recent years. Let's listen to what Shinzo Abe had to say.
We agreed to promote trade, and we've just signed the investment agreement. It will be an important milestone which will further accelerate consultations aiming to conclude tax treaties.
And Stephen, here in France, dairy farmers are stepping up their protests over milk prices.
This dispute has been focused on one major dairy company called Lactalis. The farmers want to be paid a higher price for their milk by the company. They've been protesting on one of its plants in recent days, but are now promising to expand their demonstrations nationwide. Lactalis on Friday had offered a higher price to farmers, but they say it's still not enough. Some more of the day's business headlines for you now. Uber has temporarily suspended its service in Abu Dhabi without explaining why. The ride-sharing company is continuing to operating in the neighbouring emirate of Dubai. Rival service Careem has also stopped its services in Abu Dhabi after some of its cars were stopped by authorities. Emirati newspaper The National reporting that as many as 50 drivers had been arrested over the weekend. And workers in Canada's motor industry have threatened to strike next month if they don't reach a deal with car makers. The Unifor union is in talks with General Motors, Fiat Chrysler and Ford. The union wants guarantees of new investment in Canadian factories, some of which they fear are at risk of closure.
And here in France, retailers are catching up with the rise of mobile payments. Stephen, tell us more.
Now, French retailers and banks were slow to catch on to contactless payment when compared with their partners, at least in other parts of Europe. But many are now moving straight to payment with your mobile phone. Some consumers are still sceptical about the idea, though, fearing the payments may be less secure than using chip and PIN. Josh Vardy reports.
Leaving the house to go to the shops just got a lot easier in Paris. This man only needs to remember his smartphone, which he can now use to pay at the counter. The transaction is over in an instant just by pointing his phone at the card machine. This latest technology has been lapped up at this trendy outdoor bar in Paris, where promoters say it's eased pressure on bar staff.
It's good if people can use their phones for everything at festivals or places like this outdoor bar. There's no need for little pieces of change, no more need for big bags. It cuts down the queue at the counter and it's just a lot more practical.
15% of payments at this hip location are now done through a smartphone. But French consumers in general have been slower to take to a new form of paying. There are fears that it's somehow less secure than chip and PIN. This expert disagrees.
It worries a lot of consumers because they don't have to put in their code anymore. It's a way of feeling secure and they're right. But for the moment, the reality is that these new ways of contactless payment do not generate any more instances of fraud. In fact, it's a lot less than methods of paying with a confidential code.
Others are banking on the technology eventually catching on. Here at this Paris-based tech company, engineers are experimenting with all sorts of different ways to pass on payment information. Watches, bracelets, even rings. It's this small, flexible microchip that allows the experimentation, an object available in France by the end of the year. Meanwhile, innovators in London have already managed to transform their Metro pass card into microchip fingernails.
Now, we mentioned it in the markets earlier, but the dollar has strengthened since the head of America's central bank said the case had strengthened for raising interest rates. Janet Yellen was cautiously upbeat in her assessment of the US economy. She was speaking at a conference of central bankers at Jackson Hole in the United States. The Federal Reserve raised interest rates for the first time in nearly a decade last year, and there has been now growing expectation of another hike to come in the coming months. So what does this mean for the rest of the world? Well, François-Xavier Chauchat is an economist specialised in financial markets at Dorval Asset Management. Thank you for joining us in studio. From what we heard from Janet Yellen, was there anything surprising?
Not that much. I mean, the Federal Reserve is keen on being very predictable. And what we don't really know is whether the next rate hike will be in September or December, but that's a very low margin of interrogation at the end. So we'll have a second rate hike after the first one in December. We are still in a very gradualist approach. And that is, I think, fundamentally going into the direction of stable financial markets. So no acceleration, no deceleration, a lot of predictability in a context where the US economy seems very solid.
And that's, of course, good news for the markets. People like predictability.
Yeah.
And we have been expecting, the rate hike to come for a while now. But there had been some bumps in the road. Brexit was one of them. The US Federal Reserve signalled earlier this year they were worried that perhaps that might derail things. Is this really a sign from Janet Yellen that perhaps Brexit isn't really going to have any effect?
Absolutely. They're looking at the numbers. They see that the Brexit is not a significant shock for the global economy. However, it doesn't mean at all that the Fed is relaxed about the rest of the world, because we have negative interest rates in Europe and in Japan, and in the emerging world we have still some recessions or recessionary forces. And it's very important to understand that for the Fed, this is now much more important than it used to be, because 15 years ago, emerging markets was 20% of the global economy. Now it's 40% of the global economy. That is, for US companies, it's extremely important. Therefore, you cannot have an acceleration at rate hikes without some destabilization there. And that the Fed doesn't want that.
We're looking ahead, of course, to the open of the European markets in just about 35 minutes' time now. Is this going to be good news for those markets when they open?
Well, I have no clue about what will happen to the market today, but fundamentally this stable, predictable path by the Federal Reserve is what investors need. And on this front, I expect that maybe not today, but over the next few weeks and months, this policy, very predictable policy, is going to be okay from a financial markets point of view.
What we've heard from Janet Yellen, really, I suppose it shows the gulf between what the situation is in the United States and compared to here in the Eurozone.
That's true. But at the same time, what we saw in Jackson Hole is that there were no willingness by central bankers to send any alarm bell there, because even in Europe, things are improving. If you forget about Brexit, you see that domestic demand in the Eurozone is improving, that the ECB's policy is working by improving financial conditions in many areas of the Eurozone. Therefore, we are not in a state of emergency, and this is why also this Jackson Hole symposium was not that much an event at the after all.
Okay, François-Xavier Chauchat from Dorval Asset Management, thank you for joining us this morning.
Thank you.
That's all the business news for now, Thomas.
Thanks very much, Stephen.